Hey there, and welcome back to CRAIGTRADER. I'm so glad you're here. Today, we're diving deep into the exciting world of stock picking. Whether you're a seasoned investor or just starting out, finding those winning stocks can feel like searching for a needle in a haystack. But don't worry, I'm here to arm you with the tools and strategies you need to make smarter investment decisions. Remember, knowledge is power in the stock market. By understanding how to evaluate different factors, you can significantly increase your chances of success. Over the next few minutes, we'll be breaking down some powerful techniques to help you uncover the best stocks, no matter what the market is doing. Now let's talk about you and your financial goals. At CRAIGTRADER, we're dedicated to helping you achieve the financial freedom you deserve. That's why we provide a ton of free resources, including our popular newsletter packed with even more stock tips and timely alerts. Just click the link in the description to subscribe. It's completely free. And while you're down there, be sure to give this video a thumbs up and hit that subscribe button so you don't miss out on any future content. We love hearing from you, so leave a comment below and let me know what stocks you're currently watching, or if you have any questions about the strategies we'll be discussing. Okay, are you ready to start picking those winning stocks? Let's do this. Let's kick things off with a powerful strategy that can really amplify your returns: momentum investing. Think of it like catching a wave while surfing. You want to identify stocks that are already on an upward trajectory and ride that momentum for as long as it lasts. Momentum investors believe that stocks in motion tend to stay in motion. They look for stocks that are showing strong price appreciation and increased trading volume, signaling strong buyer interest. The idea is to get in on the action early and potentially capitalize on further gains. Of course, like any investment strategy, momentum investing has its risks. One of the biggest challenges is knowing when to get in, and more importantly, when to get out. Relying solely on momentum can be like trying to time the market, which can be difficult even for the most seasoned investors. So how do you actually spot these momentum stocks? Well, charts are your best friend. By analyzing historical price data, you can start to identify trends and patterns. Look for stocks that are consistently making higher highs and higher lows over a significant period of time. Technical indicators like moving averages and relative strength index, RSI, can also be helpful tools for gauging momentum. These indicators can provide insights into whether a stock is overbought or oversold, potentially signaling a trend reversal. Remember, though, that past performance is never a guarantee of future results. While historical data can provide valuable clues, it's essential to consider other factors like company news and market sentiment before making any investment decisions. Section 3, momentum isn't everything. Proceed with caution. Now, before you go all in on momentum stocks, it's crucial to understand that this strategy is not without its downsides. Momentum investing can be highly volatile, and those upward trends can reverse quickly, leaving investors with losses if they're not careful. One of the biggest dangers is getting caught up in a market bubble. When investor enthusiasm reaches extreme levels, stock prices can become inflated, leading to unsustainable growth. Eventually, the bubble bursts, and those high-flying momentum stocks can come crashing down. That's why it's crucial to have a well-defined exit strategy when using momentum investing. Set realistic profit targets and stop-loss orders to protect your capital. And remember, diversification is key. Don't put all your eggs in one basket, even if that basket seems to be flying high at the moment. All right, let's move on to another crucial factor in stock analysis: volume. Think of volume as the energy behind a stock's movement. It tells you how many shares are being traded over a given period, giving you a sense of investor conviction and potential price action. High volume, especially when accompanied by a rising stock price, can be a strong bullish signal. It suggests that a lot of investors are buying the stock, pushing the price higher. This could indicate positive news, strong earnings reports, or a growing belief in the company's future prospects. Conversely, low volume can be a sign of investor apathy or uncertainty. If a stock is moving sideways or drifting lower on low volume, it could mean that investors are sitting on the sidelines, waiting for more clarity before making a move. Now, it's important to note that volume analysis isn't just about looking at the absolute number of shares traded. It's also about identifying patterns and trends in volume over time. These patterns can provide valuable clues about the underlying strength or weakness of a stock's move. For example, if you see a stock making new highs on increasing volume, that's a very bullish sign. It suggests that the upward trend is supported by strong buying pressure and has room to continue. On the other hand, if a stock is making new highs on declining volume, it could be a warning sign that the rally is losing steam. Another important volume pattern to watch for is a volume spike. A sudden surge in trading activity can often precede or accompany significant price moves. This could be triggered by news events, earnings announcements, or changes in analyst ratings. Section 3. Volume alone is not enough. The bigger picture. While volume is a powerful tool for evaluating stocks, it's crucial to remember that it's just one piece of the puzzle. Relying solely on volume analysis can lead to misleading conclusions. Always consider volume in conjunction with other technical and fundamental factors. For instance, a stock might experience high volume on negative news, like disappointing earnings or a product recall. In this case, the high volume would likely be driven by panic selling, pushing the price down. It's essential to understand the context behind the volume to interpret it correctly. Before making any investment decisions, always consider the company's financials, industry, trends, competitive landscape, and overall market sentiment. By combining volume analysis with a holistic view of the stock and the market, you can make more informed and confident investment choices. Section 1. Newsflash. How headlines move markets. Let's face it, the stock market thrives on news. Whether it's a blockbuster earnings report, a surprise interest rate hike, or even a tweet from a certain someone, news events can send stock prices soaring or plummeting in the blink of an eye. Understanding how news impacts the market is essential for any investor, big or small. Think of it like a chain reaction. A major news event creates a ripple effect, influencing investor sentiment, which in turn drives buying or selling activity. Positive news often triggers optimism and buying pressure, pushing prices higher. Conversely, negative news can spark fear and selling pressure, driving prices down. Now here's the thing. The market doesn't always react logically or predictably to news. Sometimes a seemingly positive event can trigger a sell-off, while a negative event can lead to a rally. That's because the market is driven by human emotions, which can be irrational and unpredictable. Section 2. Sorting the signal from the noise, identifying impactful news. In today's hyper-connected world, we're bombarded with a constant stream of news from countless sources. It can be overwhelming to sift through it all and determine what's truly relevant to your investments. The key is to focus on news that has the potential to move the market or impact specific companies you're interested in. Start by staying informed about macroeconomic trends, such as interest rate decisions, inflation data, and economic growth reports. These factors can influence the overall market direction and impact various sectors and industries differently. Next, pay close attention to company-specific news, such as earnings announcements, product launches, mergers and acquisitions, and regulatory changes. These events can have a direct impact on a company's stock price and provide valuable insights into its future prospects. Section 3. Staying ahead of the curve. Real-time information is king. In the fast-paced world of stock trading, timing is everything. The quicker you can access and process relevant news, the better positioned you'll be to capitalize on opportunities or mitigate risks. That's why having access to real-time information is crucial for any serious investor. Consider subscribing to reputable financial news sources, setting up alerts for specific companies or keywords, and following industry experts and analysts on social media. There are also numerous financial news apps and websites that provide breaking news, market data, and analysis in real time. Remember, the information you need is out there. It's all about finding the right sources and developing a system for filtering the noise and identifying the signals that matter most to your investment strategy. Section 1. Unveiling value, the power of fundamental analysis. Now let's shift gears from the fast-paced world of news and market sentiment to the more methodical yet equally crucial realm of fundamental analysis. Think of fundamental analysis as the detective work of investing. It's about digging deep into a company's financials, operations, and industry to determine its intrinsic value, what it's really worth. While technical analysis focuses on charts and patterns to predict future price movements, fundamental analysis aims to understand the underlying drivers of a company's performance. By examining factors like revenue growth, earnings, debt levels, and management quality, you can gain insights into whether a stock is undervalued, overvalued, or fairly priced. This approach is all about separating the hype from reality. It's about cutting through the noise of market sentiment and focusing on the cold hard facts about a company's financial health and future prospects. Section 2, Cracking the Code, Deciphering Financial Statements. So where do you start when it comes to fundamental analysis? Well, the treasure map lies within a company's financial statements. These documents, including the balance sheet, income statement, and cash flow statement, provide a snapshot of a company's financial performance and position. The balance sheet gives you a glimpse into a company's assets, liabilities, and shareholder equity at a specific point in time. The income statement, also known as the profit and loss statement, shows how much revenue a company generated over a period and the costs associated with generating that revenue. Finally, the cash flow statement tracks the movement of cash both in and out of a company. Don't worry if these statements seem intimidating at first. There are plenty of resources available to help you understand how to read and interpret them. The key is to focus on key financial ratios and metrics that provide insights into a company's profitability, liquidity, solvency, and efficiency. Section 3, Beyond the Numbers. Assessing company health and growth potential. While financial statements provide a valuable quantitative perspective, fundamental analysis goes beyond just crunching numbers. It's also about understanding the qualitative aspects of a business, such as its competitive landscape, management team, industry trends, and overall economic environment. For instance, a company might have stellar financials, but if it operates in a highly competitive industry with low barriers to entry, its future profitability could be at risk. Similarly, a company with a strong track record of innovation and a visionary leadership team might be better positioned for long-term growth, even if its current financials are less impressive. By considering both the quantitative and qualitative aspects of a business, you can develop a more comprehensive view of its intrinsic value and its potential for future growth. Remember, investing is not just about picking stocks. It's about owning a piece of a business. And like any good business owner, you want to make sure you're investing in companies with solid fundamentals and a bright future ahead. Section 1, The Market's Mood Swings. Deciphering the signals. We've covered a lot of ground already, from momentum and volume to the impact of news and the importance of fundamental analysis. But there's one more crucial piece of the puzzle we need to explore. Understanding market reactions. Think of the market as having a personality of its own, prone to mood swings and emotional outbursts. One day it's euphoric, sending prices soaring on a wave of optimism. The next day it's gripped by fear and uncertainty, sending stocks tumbling. Your job as an investor is to learn how to read the market's mood and anticipate its reactions. Now, predicting the market's every move with perfect accuracy is impossible. If it were that easy, we'd all be swimming in profits. But by paying attention to certain indicators and developing a feel for market psychology, you can make more informed decisions about when to buy, sell, or hold. Section 2, timing is everything. Navigating market sentiment. One of the most important things to remember is that the market rarely moves in a straight line. There will be ups and downs, periods of volatility and uncertainty, and times when it seems like the market is completely disconnected from reality. Your job is to stay calm, stick to your strategy, and avoid making emotional decisions based on short-term fluctuations. Remember, the market is driven by a complex interplay of factors, including economic data, corporate earnings, interest rates, geopolitical events, and of course, investor sentiment. By staying informed about these factors and understanding how they can influence market direction, you can start to anticipate potential reactions and position yourself accordingly. For example, if you know that a major economic report is due out soon, it might be wise to hold off on making any significant trades until after the report is released. That's because the market can react very quickly and unexpectedly to these types of announcements, creating opportunities for those who are prepared and risks for those who are caught off guard. Section 1. Mastering the art of stock picking. So there you have it. We've covered a lot of ground today, from riding the waves of market momentum to diving deep into the world of fundamental analysis. Remember, finding those winning stocks is like piecing together a puzzle. Each strategy we discussed represents a crucial piece, and it's the combination of these pieces that creates a clear and powerful picture. Momentum investing can help you capitalize on those exciting upward trends, but remember to proceed with caution and have a solid exit strategy. Volume analysis gives you a glimpse into the force behind price movements, revealing valuable insights into investor sentiment and potential breakouts. But remember, it's not just about chasing the hottest trends or getting caught up in the hype. Taking a cold, hard look at a company's financials through fundamental analysis is essential for separating the true winners from the fleeting fads. Section 2. Your journey to financial freedom starts now. As you embark on your stock picking journey, remember that knowledge is your most powerful asset. The more you learn about market dynamics, company analysis, and the forces that drive stock prices, the more confident and successful you'll become as an investor. And remember, you don't have to go it alone. Here at CRAIGTRADER, we're dedicated to providing you with the tools, resources, and support you need to achieve your financial goals. Our mission is to empower you to take control of your financial future and create the life you've always dreamed of. So, are you ready to take the next step? Are you ready to unlock the exciting world of stock investing and start building the financial future you deserve? Section 3. Join the CRAIGTRADER community. Don't forget to hit that subscribe button and ring the notification bell so you don't miss out on any of our future videos packed with even more stock tips, strategies, and market insights. And while you're at it, give this video a thumbs up if you found it helpful, and share it with your friends and family who are also interested in mastering the art of stock picking. Remember to subscribe to our free newsletter using the link in the description below. You'll receive even more valuable insights, timely alerts, and exclusive content delivered straight to your inbox. We're here to support you every step of the way. Thanks for joining me today. I'm excited to see you succeed in the markets. Happy investing.